Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, the last week to resume trade on somewhat shaky note, the Nifty futures on SGX right now are indicating a weak start coming in for Indian equities. US stocks tumbled on Tuesday after job vacancies fell more than expected. Asian shares have fallen on continuing concerns over the health of US banks. Let's talk about FIIs and DIIs. FIIs have bought in shares to an extent of around 321 crore. That's a small amount there. But DIIs, on the other hand, have sold shares on around for the amount of around 328 odd crore. Also, do keep an eye out on the entire bunch of Oil India companies, oil companies for that matter, something like an Oil India, ONGC. Government has cut all windfall tax on the crude oil prices from 3,500 rupees per ton effective, soon coming in. With that, let us get going and discuss some stocks and strategies today with Rajesh Palviya, who is the head technical research, Axis Securities. All right, Rajesh, good morning. I'm going to start off by asking you about the market's direction. It's been northward for the last 3 consecutive sessions. What's your strategy right now and your immediate support and resistance levels?
Yeah, good morning, Nickey. So looking at the overall setup, the trend is now turned to on the positive side as Nifty managed to give breakout above its consolidation range of almost 4-5 weeks. And Nifty is comfortably trading above 17,250, 17,300. We have witnessed that short covering action in the previous trading session for both the indices, Nifty Bank as well as for Nifty also. And Nifty Bank has also managed to give breakout and now comfortably trading above 40,500. So these two levels are very important, 17,250 and 40,500. Till these levels are intact for both the indices, trend is going to remain on the buying side. Buy on dip should be your strategy at this moment. But on the higher side, as we look at the call concentration data, most of the call writers are aggressive at 17,500, 17,600 600 strikes, so which are going to act as a immediate resistance for this pullback, which we are seeing since couple of days. And for Bank Nifty, 41,000, 41,200 are the immediate resistance area on this pullback rally. So buy on dip should be your strategy. 17,250, 17 is your stop loss to buy any dip near to 17,350 or 17,300 level. For Bank Nifty, your stop loss should be 40,400 to buy any dips near to 40,600, 40,500. Both indices are looking positive.
All right. So I was actually going to address Bank Nifty before you kind of took the call ahead and anyway suggested the levels, because it's been outperforming Nifty for the last few days, right? It's a holiday truncated week. You think with this, the week has started with a very controlled positivity as the traders remain low ahead of the MPC meet? Right now, we've given a positive call coming in for Bank Nifty, but do you think there is a outperformance chance out there? Do you think, what the strategy should be ahead of the RBI meeting, which is going to take place tomorrow? So any kind of differentiated strategy that you'll suggest to our market participants or for that matter viewers at this point of time?
Yeah, definitely Bank Nifty is going to get a direct impact of this outcome of RBI policy. But looking at the overall setup, short covering is clearly there. Both the indices have recovered from their oversold trajectory and range breakout is clearly there. Even the Bank Nifty component has also witnessed good buying interest. Most of the stocks from the large cap banking stocks also witness short covering action. So we believe that, whatever outcome will come, if Bank Nifty manage to hold 40,400, 500 zone, then yes, possibly one should look at to buy call option of 41,000 strike, which was almost closed at around, let me just open the prices. Yeah, it was closed at around 128 rupees. So if you get any chance to buy this call option around 100, 105 range, you can buy this call option ahead of this MPC outcome. And keep stop loss of 70 and upside target we are projecting as for Bank Nifty 41,000 to 41,200. So this call option can move further higher towards 170 to 200 rupees. So that's the strategy one can deploy ahead of RBI policy outcome.
All right. That's clearly the strategy coming in on Bank Nifty ahead of the important RBI policy meet. But Rajesh, what are your three profitable strategies or bets for our viewers this morning?
So one is definitely from NBFC space, that is Cholamandalam Investment, Chola Finance. We believe that this stock can continue furthermore upside from the current level. It's a fourth consecutive day where we are seeing higher high formation. The stock is trading above all its important moving average. So Chola Finance can be a buy for upside target of 825, 830. One can keep a stop loss of 760. Another stock which we like, that is Balrampur Chini. Stock is now almost on a verge of giving a breakout of its multiple resistance zone. And looking at the overall setup, the long build-up was clearly there in a week-on-week basis. So looking at the overall setup, we believe that Balrampur Chini can scale up further higher towards 435. One can buy with stop loss of 400. And third stock is Granules India, almost a consolidation breakout of 7-8 week. And looking at the setup on the weekly chart, stock managed to give breakout of its down sloping trend line, and it's a second consecutive week where stock is showing follow-up buying action. Long build-up was there in the previous session. So Granules is a buy for a upside target of 315. One can keep a stop loss of 292.
All right, so Granules India is also one of the bet that Rajesh has given, but let's actually address our top movers of the day, because there are a bunch of stocks there. Do remember, banking updates, Q4 updates have come in, and one thing is pretty clear. Credit growth continues to remain strong, and the deposit growth is something that needs to be watched out for. CASA at this time is highest ever for RBL Bank, and for other banks like Federal and Hindustan Bank, they're at multi-month low. But in a bunch of other stocks that we'll be talking about will be Bajaj Finance, something like IT also will be on our list, HCL Tech, and we'll be also talking about Hindustan Zinc. But let's address Bajaj Finance first, where the AUM growth in the quarter 4 has grown by 16,500 crore. FY23 core AUM growth, that has also grown by 29% year-on-year basis. The new year the new loans booked during Q4 has increased by 20%. The company right now, it's booked the highest ever new loans in the entire financial year. And even if you talk about the liquidity surplus, it's in comfortable situation right now. Deposit book overall for the financial year is up by 45%. Now, Jefferies has also come up with an update on Bajaj Finance after the Q4 update. It says it's maintained the buy rating and the target price of around 7,280 rupees per share. Do remember, the stock is right now trading around that 5,700 odd levels. It says that the pre-quarter update shows pickup in the core AUM growth to 29% year-on-year basis in Q4 compared to 27% that we've seen in 3Q. So there's a 2% jump. Even sequentially, when you just talk about the incremental growth perspective, if you talk about the growth is healthier, the sequential growth is healthy at 7% overall on absolute terms as compared to 6% that we've seen. In terms of the new loan booking, that remains stronger at 21% year-on-year versus 5% that we've seen in 3Q. So you can actually make the difference out even in terms of the sequential performance out there, right? IndusInd Bank, there is an FY23 report out there. There's an update. Advances up by 21% year-on-year basis and 6% sequential basis. Also, deposits grew by 12% year-on-year basis and 3% sequential basis. South Indian banks, where the gross advances, that's grown by as much as 17% year-on-year basis, and the deposit too is up by 2.82%. Let's also address a bunch of IT names out there, right? HCL Technologies, where JPMorgan yesterday came up with a report and placed the company on negative catalyst watch. And what it also says is important. It says that right now it's the highest near-term risk for the company. Do remember that this rating watch also comes ahead of the Q4 earnings season. Overall, it remains cautious on the entire IT pack, sees downside risk to the multiples. Hindustan Zinc and Vedanta, these are two companies that also please keep that on your radar on there. Hindustan Zinc is likely to backtrack on deal to buy the parent Vedanta Zinc business, given the kind of opposition coming in from the government. But we're going to address in the markets just in a jiffy for you to see whether you're looking at a shaky start. Tomorrow is the RBI policy meet, but SGX Nifty was somewhat hinting at a a negative start coming in for the market, but it's with a positive start, a flattish start with a positive bias out there. 0.1% of a gain, but the good part is that it's holding on above that 17,400 mark. If you talk about the Bank Nifty index, just to see how the trend is, overall it has been outperforming Nifty overall for this week. It's a holiday truncated week, right? Bank Nifty 40,865, so holding on above that 40,000 mark. 0.1% even on Bank Nifty index. And if you talk about the other sectoral indices, where you talk about the private bank, it's flat but with positive bias. And if you talk about the other sectoral indices, PSU Bank also, for that matter, is trading flattish with positive bias. Something like a mid cap and a small cap index also needs to be seen. But we'll first address the Nifty Metal Index out for you. Down and out in red with losses of around 0.5%. IT2 at this point of time, we're seeing losses coming in, 0.3% lost even on the IT index. Auto came up with the monthly sales number on Monday, and it's showing up well. At least it's holding up in green, if not for real momentum building on that one. And if you talk about the pharma index right now, that's also trading in flat with somewhat negative bias coming in. FMCG index down and out with losses of around 0.2% out there. And right now, if we address the market breadth, intra index 0.3% gain out on that one. Market breadth 32 advances versus 17 declines. So right now the momentum is favoring in even the advances, at least 26 advances versus 24 declines, the latest update. So you can see that the market breadth at this point of time is fairly divided. Right, let's also address the top Nifty gainers out there. We addressed the removal of windfall tax on the oil production, right? ONGC shining right up for you. Apart from that, Bajaj Finance and Bajaj Finance. So the Bajaj twins clearly are the one which are hogging the limelight in today's session when it comes to the top Nifty gainers out there. In bunch of other stocks that are also on the gaining side, HDFC, BPCL, and UPL Limited. These are the ones that are holding up. So financials clearly have been hogging the limelight, just the way we indicated, along with the bunch of these oil names, something like an ONGC and Oil India for that matter. Hindalco down and out. HCL Tech, like I rightly indicated, negative catalyst for that's indicating on your screen. Tata Steel, Britannia, and Asian Paints. These are some of the top losers also on our list right now. So this was the list that we have. But also, if we could pull up some of the other gainers that we've addressed, something like South Indian Bank, Federal Bank. These are also some of the banking names, which came up with the Q4 updates, just to get a flavor of how the banking stocks have been doing overall. Federal Bank down and out, 0.2%, more than 2% of losses coming in on that one. So that also needs to be watched out for. So net, we're not looking completely at a positive momentum coming in from the entire banking sector. But Rajesh, at this point of time, I'm going to toss it back to you and ask you about what's your assessment overall on the IT space. JPMorgan has put HCL Tech on the negative, catalyst watch rating, along with a very cautious outlook for the IT sector. Do you think the stocks which are going to be reporting in their numbers next week onwards right now seem attractive?
So still, if you analyze the overall setup for IT index as well as the most of the IT large cap stocks, all stocks are still in the bearish trend. Most of the stock tried to recover from their recent low, but still that is not sufficient to come out from that supply zone. So we believe some more pressure is likely to be there in most of the IT stocks. So I think post earning, if there is some positivity in their numbers, then some sort of short covering we can expect. But as of now, our call is to avoid the IT stocks at this juncture because still the trend is negative. Nothing there on the derivative front. Also, most of the shorts are still intact in the system. So we believe that some pressure is likely to be there in most of the IT stocks.
All right, and also your word coming in on the Bajaj twins, right? Bajaj Finance has come up with a healthy update out there when it comes to the Q4 quarterly updates out there. Bajaj Finance and Bajaj Finance both are the top gainers that we have on our Nifty call list today, the top gainers list. What are you making out of it and what's the strategy on this one, please?
Yeah, both stocks have done well in today's opening, and Bajaj Finserv is looking quite attractive. Almost 7 days range breakout is there on the technical setup, and the stock is almost now inching towards its 50-day moving average. So, looking at the setup for Bajaj Finserv, we believe that if stocks continues to hold about 1295 level, then possibly stock can rally further higher towards 1350, where one can book some profits. Bajaj Finance also given a breakout of its downsloping trend line on the daily chart. Looking at the setup, we believe that if stocks continues to hold above 5800 level, then possibly next target for the stock towards 5950 to 6000 level. So here also one can trail their stop loss towards 5800 to hold their long position.
All right, Rajesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. Right, and that's part of the show where we address the entire stance coming in on the fundamental side of the story. RBI policy meet, and tomorrow we're looking at a couple of indicators from the globe. And of course, it's the start of the new financial year. So what's the portfolio strategy? Let's actually figure out all the answers to this question from Gaurang Shah of Geojit Financial Services. Good morning, Gaurang. It's a holiday truncated week. What's the mood out there, and what are your opening remarks looking like right now?
Thank you very much, Nicky, and morning to all of you. So I think if you take 2 days holidays, you have a long holiday week coming through. But unfortunately, for people like you and me, we have to burn the midnight oil. You have the Q4 earnings season unfolding. And before I start off, I think over the last maybe about month or so, market has been range bound with negative bias. And it's good to see the recovery that we are seeing over the last couple of days. But before that, a lot of people were frustrated with the kind of market moves that we had. A lot of people used to ask me, what is the way up for the market? How much longer? How much more pain do we have to bear? So I often used to reply to them in form of a shairi by the great poet or shair Mr. Mirza Ghalib. So I used to tell them that Guzar jayega ye waqt bhi Ghalib, zara itminan to rakh. जब खुशी ही नहीं ठहरी तो गम की क्या औकात है. In the sense, have a little bit of patience. When happiness could not be there for all the long time and it went away, what is the credibility of the sorrows and the pain that you are witnessing? Just to translate into a brief kind of English translation. So, Nicky, my sense is that we are going to see the interest rates inch up by quarter basis point tomorrow when the respectable RBI governor announces his stand and what the monetary policy committee has recommended. So we are going in with 0.25 percentage hike in the interest rates, and this might be possibly the last one. Hope that there will be no further interest rate hike, and there'll be a flattish kind of a pattern that we'll see on interest rates. And in case if the rain gods have to be kind enough and there is no deficit because of that scare of El Nino and inflation doesn't inch up, then possibly you will see gradually, not immediately, but interest rate moving down. It will be a while before that. Then along with that, next week on 12th of April, you have the curtain raiser for the Q4 last financial year, starting with Infosys, I beg your pardon, TCS, Nicky. And over there, our expectation is that there could be a shade better than what the street is expecting. Along with that, you had the auto numbers. My sense over there, Nicky, is that the commercial vehicle segment is doing extremely well. So you have likes of Ashok Leyland, M&M, Eicher Motor, Tata Motor, who are into this manufacturing of CVs. Two-wheelers was the second one, followed by tractor and agri, and then possibly passenger vehicles. In and all, we are in a range-bound trade. But, times like this, our sense is that these are great opportunities to create a long-term, fundamentally sound and strong portfolio.
All right, Gaurang, I like the perspective that you had overall on the markets and how you kind of equated that to the shairi out there. But let's actually talk about the banking sector, right? In fact, the financial space, to be honest, CLSA has come up and upgraded Bajaj Finance out there. There have been a bunch of course, Q4 updates coming in from the entire space. Sure, the one thing which is common thread that we're witnessing in the entire financial space is the fact that, the credit growth has been strong. But what could probably be the driver now is the deposit growth and the CASA ratios, which for some banks at least are at a multi-quarter low. How are you looking and reading into this entire space, please?
So before I comment on that, I think it would be prudent on my part to advise your viewers and investors to make sure that at least 15, 20 or 25%, in case if you really have a little bit of, risk appetite on the higher side, uh, please allocate that portion to the banking and finance. And the reason why I say that, Nickey, is because we have very strong conviction towards private sector banks, certain public sector banks, and area or business vertical specific NBFCs, be it diversified financial companies, be it housing finance companies, or be it microfinance companies. So these are the three segments amongst the NBFC sector that we have broken down. If you recollect, Nickey, last quarter, that is before the third quarter numbers were announced, most of the management of all the strong and leading public as well as private banks, certain NBFCs, the management were absolutely vocal enough and they gave a verbatim that the advances and deposits, both the numbers are looking very strong. CASA ratio is extremely, extremely strong. And that reflected on the numbers that we saw for the third quarter for the most of the banking as well as NBFC companies. Coming to fourth quarter, I think very recently we had some of the management giving out a verbatim that this time also the advances and deposit number is extremely, extremely strong. And so is the CASA ratio. If I have to throw in a little bit of more positivity in terms of what the finance minister did in the finance bill, in terms of bringing the debt fund into the tax gamut, and they earlier the slab was lower, it enjoyed the indexation benefit, etc., etc. So now you are at par with FDs. Our sense at Geojit is that maybe some portion of that liquidity will come out from debt funds and possibly go into banks via FDs, which will again have a stronger deposit number, and thereby they will have the capability and credibility to lend even more and thereby improving the margins. So I not only feel that for this fourth quarter last financial year, but for the next couple of financial years, banking and NBFCs will continue to dominate the spotlight or hog the limelight. And that is purely because of the credit demand that we are seeing at ground level and the opportunities that lies ahead of the bank. And let me tell you this, that if we are dreaming in that India should become the next 4 trillion or 6 trillion or maybe 8 trillion economy, then you can't do that without banking sector being the strong backbone to take us or lead us to that path of 4-6 trillion economy.
Gaurang, I get your optimism behind the banking and the financial space, but the only point of concerns for most of the brokerages around at this point of time is the fact that it's a rising interest rate scenario, right? So what do you make out of that? I mean, do you see any pressure coming in for the NIMs out there? They've been, until now, they've held up. But do you think from this quarter onwards or maybe the next financial year, even the NIMs will start contracting, in which in turn will not reflect well on the valuations? What's your perspective on that one?
So I think, first of all, let me put certain perspective or clarity in a lot of people's mind. Most of us assume that the RBI or the MPC have to do what the US Fed does. I think that's a very wrong kind of a thought process that one has. I mean, look, UK and US are at 30 or 40-year high as far as inflation is concerned, and they will have to think out of the box to rein in inflation and possibly bring in growth. But in that kind of an equation, they can't do without raising interest rates. Whereas India, I think over the last 3 months, whatever data we had as far as the WPI and the CPI number is concerned, they have been consistently on the lower side. And the RBI governor has also made a statement that where the inflation is right now, we are at a comfortable zone. The only joker in the pack, Nickey, are 2 points that I want to make. One is the recent announcement by OPEC Plus to cut crude oil production by almost 5 lakh barrels per day starting 1st of May, which has of course, led to crude oil prices jump up almost about $4 or $5 over the last 2 days. And the second one would be in form of if the impact of El Nino is going to be severe on the monsoon season, then that will push up the agri commodity prices. Along with that, if crude oil moves up, and if India is not able to secure its energy requirement from Russia to a great extent, then we have to pay a price for that. That will also lead to a little bit of higher inflation. So these are the two, jokers, I would say. Only, coming near future will tell us where do we stand in terms of both these, problematic issues that we have to face. With your question, well, if these two has an impact, then naturally inflation will move up, and in that case, even we'll have to, increase our interest rates. But I think it will not be at the speed at what other central banks do, especially in UK and US. So we are relatively in a better place, and hope that crude oil is nothing that we'll have to worry about, and we are able to secure much of our, energy requirement from Russia. And of course, in terms of monsoon, let's hope that the rain gods are kind enough this time also. But it's a little bit premature to talk about both these points right now.
All right, so let's talk about the oil stream companies and the perspective that you have on that one, please. Because in oil stream companies also, like you mentioned, that there was this OPEC, oil prices which were OPEC cut draws as the US, was a concern. And also today we have a development which suggested that, the government has cut the windfall tax on all crude oil. From 3,500 rupees, and in effect we also saw ONGC doing well in today's trade. Overall, how do you look at the basket? Do you think there is a further upside from here on?
It pains me to say, Nicky, that when crude oil was at maybe $40 or $30 a barrel, these companies didn't do much. When crude oil is at about $70 or $80, it's more of a problem for these companies. Short-term inventory gains can be something that you can look at, but that does not translate into too much of profitability. And over the last 4 or 5 years, correct me if I'm wrong, Nicky, both oil OMCs and exploration companies, that is oil marketing companies like HPCL, BPCL, on IOC we have a sell recommendation. On HPBP, we have a buy recommendation. On Oil India, ONGC and GAIL, we do have a buy recommendation, but it has not done much. What I'm trying to say is that these kind of companies can be at best be, placed for dividend payouts, wherein the government gets, the annual dividend or, intermediate dividends. And if you are a shareholder, you end up getting that dividend too. But beyond that, appreciation of your capital, if you look at the last 2, 3, 4, 5 years, then I don't think these companies have done much. If you are relatively, you don't want to take a risk and you want 20% or maybe more every year, you want a dividend from your investments. And if you're only looking at that perspective with maybe little bit of appreciation in your capital that you invested, possibly then you can look at all these companies that I mentioned, because as a disclosure, we do have a buy coverage. But if you have a little bit more potential and if you expect a little bit more, then I think there are much better sectors to look at.
All right, talking about other sectors, the last question that I have in mind for you is about city gas distribution companies, something like an MGL, IGL, all of these. They took it hard on the chin after a report suggested that, there has been a couple of things which have been, Kirat panel recommendations haven't come through. They were supposed to be implemented, applicable since April 1. Right now, the government hasn't really taken that on board. Although the committee is hopeful that if it's not for April, maybe it could be May for that matter when the recommendation actually come through. It's got to be a positive coming in for city gas distribution companies, but has not been applied and implemented thus far. How do you look at that, and do you see a further upside or a downside for this particular sector right now?
So, Nicky, I think last week, in anticipation of the recommendation of Kirit Parekh committee getting implemented, you had almost 4-5% or maybe more upside in stocks like MGL, IGL, Gujarat Gas, Gujarat State Petronet, to a certain extent a little bit higher side on the stocks like Petronet LNG. But unfortunately, the APM recommendation, that is adjusted price mechanism, which was given out as a recommendation in that report, was not implemented. Now, I'll tell you two things, Nicky. One is that you have multiple state elections in this year. 2023, and then next year you have a big election. I think in this kind of a scenario, I don't think the government will want to play with any kind of risky sentiments by increasing the CNG and LPG prices. So I think we are in a long haul as far as any kind of changes in the pricing is concerned for natural gas. And that may lead to a little bit of constraint in terms of all these companies which are into, CDS, that is city gas, CGS, city gas distribution field, or maybe, even as a matter of fact, automotive clean and green fuel in form of compressed natural gas, CNG, that is. So we have a buy call. And if you ask me between oil marketing companies and exploration companies and alternative clean and green fuel, I think I'll give a little bit more weightage to the alternative clean and green fuel gas distribution companies like IGL, MGL, Gujarat State Petronet, Gujarat Gas and Petronet LNG. You have a little bit of expectation in terms of consumption going up and their volumes going up. Yes, I was also in that camp that the APM recommendations will go through, which was mentioned in the Kirit Parikh committee, but that did not happen. And the stocks corrected after that. So if you're looking at 1.5 to 2 year kind of time horizon, compared to oil exploration and marketing companies, gas distribution companies are much better placed.
Right, gas distribution companies are better placed as compared to the OMC. That's clearly the word coming in from Gaurang Shah. But Gaurang, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Always a pleasure. Thank you.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.